Uh, good afternoon, wherever you are, all over the world. Welcome to another video by the Market Maker essay. I hope you are doing good. I hope you are doing well. I hope you are trading strong, and I hope you are doing very good in the market. So yeah, without further ado, let us begin. Let's begin. Today we'll be looking at the breaker block. Now, breaker block more specifically the ITC breaker block. Now, obviously, what is a breaker block? A breaker block is an area in the market. Well, it's an area of points of interest where um market uses it as support or resistance, which was it's an area. It's a area or an order block that wasn't previously respected before the move is currently happening now, and is then used as support or resistance to continue the trend. That's what a breaker block is. Now, a breaker block is quite very useful because there are in some instances where the only point of interest that might be in that specific mitigation block is a breaker block, and you might not have a choice but to trade. Or what could happen is you could use the breaker block as a added further confluence, as an added further confluence to the main point of interest that you've identified. So yeah, without further ado, let us begin. I think we're gonna start from the present time going back, so that's not really a problem. So let's just begin. I mean, there's so many examples, but we'll start with this one. So what do we have here? Obviously, obviously we know that right now EURUSD is current epic formation low, level 1, level 2, and market is moving away. But I want us to take notice at this retracement move. Obviously, market came to this area, gave us this head and shoulders pattern. Very, very nice stuff right there. Of head and shoulders, half a Batman move. Market dropped down, made consolation and showed displacement away, obviously breaking significant structures. Now, obviously, in terms of the breaker block, obviously first on our checklist we have to identify our major break of structure, change of character, right here. Then that being our that being broken, that becomes our lower low. Then we start looking for a mitigation block. Now obviously from that area, moving it to the right, you start to identify the point of interest from the from your previous supply zone to the break of structure, which is right there. Now obviously now we start looking for a previous order block that wasn't respected. Now if you move on to your left, you see right here there was this base rally that wasn't respected because market ended up taking it out completely. Now obviously what did market do in that instance? Market then came back to that specific previous order block, using it as a flip zone and moving away in our mitigation block, in our fair value gap. Now obviously when that happens, that then confirms our breaker block. That previous order block, that previously not respected order block becomes a breaker block. So it becomes a function that you can use, a function that wasn't used back then. You can use it now very nicely. Then obviously the last chapter there we start identifying our buy and sell side liquidity. So in this instance will be all the people who are in there trying to sell this fair value gap early, or people who are trying to be people who are trying to be breakout traders right there. They all got taken out by this move back. So all this becomes sell side liquidity. So very nice stuff there. First example for down candle of a breaker block. So yeah, I feel like it's quite easy to understand. And if you can combine it with everything else, it will make your trading much easier. Uh, Another example we have here is sometimes, guys, you have to remember it can be any previous order block that wasn't respected. Because in this area, as you can see, we have this very nice head and shoulders pattern that was formed. And obviously, what did market do? Market broke this significant structure, so that counts as our first break of structure. Obviously, mitigation block wise, we have our previous from the break of structure to our previous, in this instance, supply zone. That becomes our point of interest. And then obviously number 3, We start looking for that previous order block that wasn't respected. The only previous order block that I see that wasn't respected in this instance was right here. Right here, market came to this area, was supposed to come back and drop, but market didn't. Market took out all those people, making them liquidity. But you can see what market did. Market then came back to that area, making that area what? The breaker block. So obviously then, when we're looking for buy side, sell side, buy side, sell side, buy side, sell side liquidity, let's drop down to our H. Let's go to the H1, so we can get a more micro view of what we're trying to do here. And as you can see right there, what happened, all those people who were trying to buy early, who were trying to sell early, as you can see right there, were then taken out, making them sell side liquidity. Because even though you could, where was the point of interest? Thing is, there are people who do this because they're the accumulation, manipulation, distribution traders. So I mean, not saying accumulation, manipulation, distribution is a bad thing, but if used in the wrong context, it is bad. And in this instance, how do you identify the wrong context? You look at your fib. Your fib will identify the premium and the discount zone, and currently it wasn't a discount zone, it was too cheap to sell. So very, very important, they're very, very key. So now obviously market went down and created this up peak formation low right here on the H1. So obviously then from that area, what did market do? Well, we're expecting market to take out insignificant structures. You can see what market did there, but let's just dumb it down even further. Okay, came there, first leg, second leg. Market then broke structure. Obviously market had to fill that imbalance, had to fill that buy side, sell side CB, that imbalance. So that's very, very key right there. And obviously we know from that area, it's basically an area that you can trade because you know market has to fill it up. So very, very important. They're very, very crucial. So what then market maker did, obviously market gave us a rally, base rally. Now obviously this base area, one thing that I don't like about it, it wasn't a down candle order block. So we know that our most important point of interest right here is our fair value gap right there, very, very small fair value gap. But what you can then identify from the left of that fair value gap, what you can identify from the left of that fair value gap, as you see right now, we have this tiny break of structure, but this was also a previous order block that wasn't respected very much on the smaller time frames. You can see what market did. Market came into that area, creating the breaker block. Now there wasn't much liquidity grabs there, unfortunately, so that's something that's quite disheartening, but it's fine. Then obviously market continuing from area breaking significant structures, thus beginning the checklist cycle again, because we have that break of structure. And we start looking for our mitigation block, of course, previous order block to previous supply zone or demand zone, in this instance our demand zone, to the break of structure, that being our mitigation block. And then number two, we start looking for those areas that we're talking about. And obviously the only one I see from these areas is obviously market then came back down to this down kind of order block and went away. But what I can see here, of course, from this area of a rally, with a big rally, no base area, the only thing I see is a fair value gap. But what's that fair value gap paired with? I might say exactly a previous order block that wasn't respected. And as you can see what market did there, market then splendidly went away from that area. Obviously, I mean the main point of interest was the fair value gap, but the point that the breaker block as well was quite influential. Very, very nice stuff right there. Very nice stuff right there. Another area there will be obviously now we had a change of character. Then obviously with this very nice break of structure right here. Now this is really, really important. Obviously that break of structure is then coupled up with our mitigation block. And then what market did, market then came back to this breaker block. But obviously if you can look closely, where do you see? I see a previous order block ish that wasn't respected right there at the back. You can use it as extra confluence. The market was gone. Now the key to catching this trade was actually quite simple because it was a NFP trade. I remember it was quite simple. The key, but for you to have caught it, you have to be disciplined, because you would have seen people right there trying to sell it, sell side liquidity. People down there trying to sell it who made a bit of money, and then market came back, took them out. So very, very key, very, very important right there. Very, very key, very, very important right now. And obviously market is in the era now of change. It's an era of change in my opinion, because market is came to this market it came to this down to this demand zone right here. Expecting market to go up, completing level 2, level 3, level 4, level 5. So yeah, guys, that is the breaker block. That's how it works. In a nutshell. Honestly, I think it's a great tool to use, especially to for it to be at a confluence. It will make your trade much stronger, and you'll be much more confident in your trade. But you have to use it in the right market context. That's the only way it's gonna work. That means identifying your bias, identifying your directional bias in terms of your level count and where you are in the cycle. Also, be very very key. Understanding the bigger picture, and also understanding where price is coming from and where it's headed. All those things will be very crucial to then using the breaker block to your advantage. So yeah, guys, thank you guys for watching the video. Don't forget to like, comment, notification bell. This year we're trying to hit 1,000. This year we're trying to hit 1,000 subscribers. We're trying to hit 1,000 subscribers. We're trying to become monetized. So it's very key, very important, guys. And yeah, thank you guys for watching.